Hello, everyone. It's Diana Matichyn, your favorite broker. And in the midst of all the times and all the things that are going on today, I wanted to give you some information what's realistically going on in real estate market. I'm not going to fluff it up. I'm not going to make it seem too positive because we know we are living through unprecedented times right now. But I think what you need to do is you need to know the truth on what's really going on. So I have a few slides prepared for you so you can take a look at the statistics of what's going on, what happened in the past with economic slowdown, with other things that happened in the US economy, and how we can predict what's going to happen with coronavirus. And once it's all passed, what can we expect in real estate market? So just bear with me. I will share a screen with you so we can watch the slides together. And I will start with a slide right here that is basically we're talking about interest rates. That has been a very hot topic in the last few weeks. But just so you know, the interest rates did go down, as you can see right here, to 3.29%. That was the lowest historically that we've seen. They did go up. So the data I have here is of March 19th. As of today, they're almost at 4%. So they did go up again. And why that happened is because the banks were flooded with applications for refinancing and they couldn't supply the demand that they had. So the rates did go up again to basically what they were before. And we're still seeing people that are looking to buy. Not every buyer out there is waiting to pull the trigger until they see the lowest interest rate. If buyers need to find a house because their rent is ending, or the wife is pregnant and they need a new house really soon, they're not going to care what the interest rates are. I've heard stories of people having 18% interest rate on their house. It's insane to comparing to what we have right now. So that's just to give you an idea. Now, and as far as what happens when the stock market crashes and goes into a bear market, how does it influence real estate market? So I have different ideas as far as what happened in the past that I'll definitely would love to share that with you because you can see based on data. So as you can see, 2007, 2009, we had 51% correction and crash in the stock market. But then look what happens when we come to depreciation of home prices. 4.6, 10%, 4.1. In some areas, they were much higher. In some areas, not as much. So the price point where it's 200,000, 300, 400,000, they don't depreciate as much because there is a lot of demand no matter what the market is for houses like that. So that's the averages. So you can see how stock market actually doesn't influence house prices. And 2008, 2009 crash was actually caused by a mortgage meltdown. So there's a comparison here, and this is for David Rosenberg. He is a chief economist, and basically he compares what we have now, coronavirus, with 9/11. This is what he says. What 9/11 has in common with what is happening today is that this shock has also generated fear, angst, and anxiety among the general public. People avoided crowds then as they believed another terrorist attack was coming, and they are acting in the same way today to avoid getting sick. The same parts of economy are under pressure. Airlines, leisure, hospitality, restaurants, entertainment, consumer discretionary services in general. So you see, this is what is similar. People said that back in 9/11 that they will never fly again. So you see, things like that, these are very emotional ways of how people respond. And yes, the market slows down in real estate, but then we'll recover again because people, no matter what happens, people will always continue having babies and will always need housing. So that is good news for us. Now let's look at .com and 9/11 crash. So S&P 500 correction was 45%, and then annual home appreciation. So you see depreciation was in 2008 and 9, and now we have appreciation. The home prices still went up during the crash of stock market back in .com and 9/11 crash. So in 2000 was 8.6%, 6.6, and 8.5%. This is solid data that are gotten from the resources. So this is what we talked before, and you may remember in the beginning of the year, I sent you a video that recession doesn't equal housing crisis. In 2008, it was different because it was caused by a housing sector. And now that's not what we see as far as the stock market, what is connected with the housing market. So there's another quote I wanted to share with you with Bill McBride, and what it says is, with sudden economic stop and with many states shutting down by closing down schools, bars, and restaurants, my view is that US economy is now in a recession, and GDP will decline sharply in Q2. The length of the recession will depend on the course of the pandemic. So obviously there's a lot of unknown to the situation. Now, going to the GDP forecast, what they are forecasting as far as the Q1, 2, and 3, and 4. Obviously, when this is all done and over, we will be getting back to our jobs and our economy will be going up. Okay, and then there is another from Wells Fargo, a great quote that I wanted to share with you is that we do not expect a repeat of severe recession of 2008-2009 because their virus and oil shocks are not endemic to the financial system, but are rather external. Once the virus infection rate peaks, we expect the recovery to gain momentum into a final quarter of the year and especially into 2021. So yes, this is not something that will just stop in a week or two. We have to go through this virus. We have to make sure we're safe. But once we do get back to our work and start going back to our normal, things will pick up again. And then just a quick chart so you can see of how pricing on homes actually survived during other recessions. So it was a big difference in 2008, like we discussed, because it was caused by housing market, housing and mortgage sectors. But then all the others, 3 out of 2, the prices actually went up in different recessions. So as far as foreclosures, you might think maybe if you're thinking as an investment, maybe it's time to start looking at foreclosures. So foreclosures, and that's something that we have seen, and it's really nice that the FHA did that they suspended foreclosures and evictions for at least 60 days, which is great because this is how people will continue staying in their homes and get their equity back. Now, I wanted to share with you this. Total home equity cashed out. Why this is different in 2005, 6, and 7, and how it's different now in 2017, 18, and 19. So take a look at how much money was pulled from the equity from people's homes. So in 2005, $263 billion, and basically total from 3 years worth $824 billion. And back then, people were buying jet skis, boats, very nice vacations. Now, what we see in the last 3 years is that the total of how much cash was pulled out of people's equity was $232 billion. So much, much less, as you can see here, the two numbers. And what they were saying is that when people were pulling out cash, it was to pay for college, it was to pay for renovation. So it was a smart investment. And more than 50% of homes in America have great equity in their homes. So that's great news. That's why we're not going to let the crash of the stock market ruin the real estate market. We're all going to be good. As far as the showings, what I've seen is that right now I have about 15 listings, and we do have 5 to 6 showings a week on all of the listings. So it is not dead. People are still looking at houses. As real estate agents, we are from home. So we're still working. We're actually showing homes to people that really need a house in the next 30 to 45 days. And as a realtor, I also do virtual consultations for selling a house. So if you're not ready right now because of all uncertainty, that's okay, because we can start preparing and do a coming soon campaign for your home. So buyers that are going to be ready to buy soon, they know your home is coming on the market. So if you have any questions, let me know, because I know this is a very interesting topic. We're living through different times right now, but what I am here, I'm here to be of service and make sure that you make educated decisions for you and for your family. Thank you so much for listening, and I hope to see you very soon. Bye.